All right, so tax process. Tax process is other way we can say it is a VAT. So the value-added tax paper is one of the very basic understanding for the VAT for our level 3 AAT with the new syllabus AQA 2022. We used to call this paper indirect tax, and almost, I would say, 90% to 95%, the topic is similar that cover indirect tax to the tax process paper. Only the few new thing they have introduced with this new module, that is the PAYE payroll. So payroll wasn't the part of the tax process before, but with the new syllabus, with the tax process paper, you will have this new topic, that is PAYE for the payroll. Except that there are very minor changes we have. For example, for the export and import. Now, we used to have a VAT acquisition on the EU country. Now, because of the Brexit, we do not consider the EU country, or we do not consider the single market anymore. So for that reason, now, even if we buy from France or from Germany or from Italy, it will be treated as an import. And if we sell something to the EU country, that will be export. But if you looking at the indirect tax paper with the last module AQA 16, you have seen we have treated this one is a acquisition from the EU country. The treatment was a little bit different, but with the new syllabus, it is quite straightforward and more easy to understand, because now every single country, rest of the world, it will be treated as a either export or import. So the rules is same. So in this case, our story will be a little bit shorter. The way we calculate the VAT, it will be more straightforward. We'll go later on there. For the time being, we'll start from the very beginning. Let's have a look the content and how many questions will be in the exam, how many hours. Just take an overview before you start the lesson. So let's have a look at our table of content. The course content, we can see we have 8 chapter here. Now this 8 chapter, before it was 7, as I said, a new chapter they have introduced with the payroll system. With the payroll system, this is a new chapter they added with the indirect tax paper to make it tax process. Now rest of the chapters we have, it is a very much similar with the old VAT paper, but it is a regardless for us because we're starting for the AQA 2022, so we really don't have to know what changes they make. If you already study indirect tax, it will help you a lot, but if you want to do the exam for that, you have to know the new thing anyway. So let's have a look what we have here. The first chapter we have here, that is introduction to the VAT. So here we don't have much thing. So we're going to learn what is input VAT and what is output VAT. That's all we're going to look at chapter number 1, and how the VAT work. For example, who is the ultimate people pay the VAT and how the VAT system work. We're going to look at very basic information on chapter number 1. Chapter number 2, we have a VAT basic. Here we're going to look at the registration limit for the VAT, when a person or a business need to register for the VAT, when they can deregister, what is voluntary registration, what is compulsory registration, when the person have to register within how many days. All of this we're going to look at on chapter number 2. Chapter number 3, we have an input and output. Here we're going to actually look at how to calculate the VAT. For example, if I'm a business, how I calculate the VAT on sales, and how I calculate the VAT on purchase, and how we calculate the VAT that we need to pay to HMRC, or are going to claim it back. So what is the calculation we're going to look at on chapter number 3. Also, we're going to look at, in some circumstances, we are not allowed to claim the VAT. For example, if we have a entertainment of UK customer, if we have a purchase on the car, so few things we need to know. There we cannot claim the VAT. It is not allowed to claim the VAT. A few things we have to know from that chapter. Also, you're going to look at what happened if a business supply different sort of product and service at the same time that some product or service is VAT related, some are exempted. For example, we have a different sort of supply. For example, you have a standard rate. The VAT standard rate in UK is a 20%. So 20% is the standard rate. On the other hand, we have something called reduced rate. Now, reduced rate could be 5%. We have something called flat rate. We have something called zero rated. And finally, we have something, it is called exempt supplies. Now, exempt supplies, for example, a charity. So if you are exempt supplies, so if you only sell the product that is exempt supplies, in this case, you don't charge VAT to your customer. By the same time, you do not claim the VAT from the HMRC. So you don't do anything, you just exempt it. If you are not exempted, you have a different rate. You have a reduced rate, you have a flat rate, you have a zero rate, or you might have a standard rate. So all of these things we're going to look at on our chapter number 3, that's input and output VAT. Chapter number 4, we have the accounting for the VAT. Here you're going to look at how to calculate the VAT actually in different product on different services. Chapter number 5, this will give us the bigger picture for the VAT return. That return actually going to submit to HMRC. Now, all of us, we know something called MTD, that is making the tax digital. That means before the business or the person, they don't have to have a software to make the VAT return. But now, if you are a business or if you are an individual person who is responsible for the VAT, you have to have a software. Now, before the HMRC, they have a website and you make a login on that website. And all you need to do, you need to create a login and they will give you a VAT number and you put the input amount and the output amount, and you can submit the VAT return by using their software or on the Gov website. But HMRC said, no, we're not going to do it anymore. You should have your own software, and we called it making the tax digital, and you have to submit your VAT by preparing the VAT return by yourself, and you should have a record for that digitally on your software. So this is a little bit tricky for all the business now. And they said, unless you are prohibited by any religious belief, for example, if your religion stop you to use the computer, or if you have a faith, you cannot use the electronic device, only that case you might be exempted, but other than you have to have your software. So this thing we're going to look at, like how does it work? So in the VAT return, we have total 9 boxes. And we're going to look at what sort of information we include and what boxes and how we submit the VAT return to HMRC. And then we have a chapter number 6. Chapter number 6, we have a VAT scheme for small businesses. So you have a different sort of scheme. For example, you have a cash accounting scheme. We have an annual accounting scheme. We're going to look at all the scheme and what is the condition for that sort of a scheme. So which business is eligible for that scheme, which business is not eligible for that scheme. Then we have a payroll system. Here we're going to look at our payroll story. For example, the statutory deduction, the voluntary deduction, the journal for the payroll, and how the payroll system work. We're going to look at from chapter number 7. This is the new addition for our indirect tax paper. Then chapter number 8, we have the VAT and the PAYE administration. Here, all about like admin. For example, if you don't submit your return, what will happen? How much penalty you have to pay? This sort of thing we're going to look at from chapter number 8. And there is not many calculation there. Few rules you're going to learn from chapter number 8. So this is the story of our indirect tax paper. This exam is quite straightforward. It is possible you can have a very good score in this exam. You can have even 98% or 100% in this exam, because this exam will be very much solid answer. So they will ask you how much is the VAT return, what will be the amount, this and that. So if you get the right score, or if you get the right calculation, you will end up with a very good score in this exam. So many students I have seen, they got even 100% on this tax process exam. If you know the rules, because in the exam, the question will be very much precise, and you already know what question will be in the exam. So if you practice well, this exam will be really straightforward for you. All right, so let's have a look our little bit the exam structure. How many questions, what we're going to look at. So you can see the exam will be computer based. So that means every single question you do, it will be marked by the computer. But before, with the AQS 16 syllabus, we used to get the result immediately. For example, if we do our exam and we get the result within half an hour, sometimes in 2 hours. But now with the AQA 2022, you're not going to get the result immediately. They might take 3 weeks to 4 weeks to give you a result. So the way we do the exam before is a little bit different now. So you have to make your own login with the AHU website, and the center, they will set up the exam for you. All you have to log in, and you will be able to see the exam is already set up there. You have to double click the link and they will unlock the exam for you. That's it. So the exam will be 1.5 hours duration, and obviously this one will be another very short exam. So it's only 1.5 hours. And let's have a look what how many questions you're going to look at from this chapter for this exam. All right, so any question you have, you can make a note for that. So after the lesson, before you finish, I will ask you if anyone have any question. So that time you will be able to ask you any question you have. All right, so let's have a look what we have here. So assessment is structure. We have like 1.5 hour exam, competency is 70%. Every single 8 exam we do, level 2, level 3, level 4, every single exam we do, we have a competency level is 70%. So we have to score 70% to pass the exam. It is not necessary you have to get 70 marks, but you have to get 70%. What is the difference between these two? Not every single exam in 80 is 100 marks. For example, the exam can be only 80 marks. That means on this 80, we have to score 70%. It is possible in level 4, I have seen some exam is 140 or 160 marks. That means on 160, you have to just score 70%. So it is not necessary the total marks have to be 100. It could be more or less. So obviously, like we have to score 70% on that exam. 8 question we're going to look at. 8 question will be in the exam, and we will know exactly what the question, from where it will come. That will give us the explanation here. So we're going to cover every single chapter anyway. But if you think like, okay, I want to score 70% first, and question number 1, question number 3, question number 5, question number 7 and 8 is easy for me, I'm going to answer this question first, then I'm going to come back to the rest of the question. No problem for that. You can make your plan. You can do the exam the way you like. You can always come back. And obviously, this is the way you can secure your pass. Then you can score for the more marks in the exam. But we'll cover the whole book, whole question, every single activity we have in the book. We're going to practice all of these things together. All right, so let's move on. So we have this initial briefing. Now we're going to look at our chapters. So if I look at our first chapter, that is Introduction to VAT. As I said, we don't have much in this chapter. We have very little thing as just the introduction to what is VAT. Well, let's talk about a little bit about that. So if we go to the chapter overview, we'll look at what we're going to cover from this chapter. So it's a VAT. Now, let's talk about what is VAT. So VAT is the value added tax. All of us, we know that VAT means value added tax. So if anything added extra value, we have to pay extra tax for that. What does that mean? That means if something that we cannot have is as natural, for example, if you're talking about the product or if you talk about something like a that didn't add any value. For example, if you buy the meat from the meat shop in the street market, you will see they're not going to charge the VAT for you. Why? Because this meat may be never processed. So the way they find the meat, they sell to you. For example, some product, you'll see the fruits they're selling, some of the fruits they're selling the way they bring and they sell it to you. And they're not going to add any VAT on that because they never added any value. Now, for example, the same fish that you buy from the fish market, and if the same fish you wash and you add some chemical or sort of something that will stay longer, the fish, and you cut the fish and put in a tin and you sell in a Tesco or Sainsbury, and you'll see they added the VAT there. Why? Because they've done something with that. They make some processed. With the service, with the product, so we have a different way to add it some value. So when it added some value that doesn't come naturally, we have to pay the VAT for that. VAT is another form of tax. Remember that income tax is the tax that we pay by deduct at source. We'll say from the employment, from anywhere when you earn, they deduct the tax at source. What does that mean? Deduct at source. Deduct at source means when I earn some salary, our employer, our company, they will deduct the tax first on behalf of me, for me, on behalf of the HMRC, and they will give me the net salary. That means the tax will be already deducted before actually I receive the salary in my bank. But the VAT is a little bit different. So they will give you the money, but every time when you're going to spend it, for example, if you go to Tesco or Sainsbury or anywhere, you have to pay the VAT. For that reason, income tax, we called it direct tax, and the VAT, we called it indirect tax, because this tax is not directly on us, but other way, the tax we have to pay anyway. And this is kind of a technique every single country, the government used. For example, if the government said, like we have to increase the income tax rate by 5%, and everyone will be upset. Now, obviously, if you look at, if the government said like, okay, we are deducting the tax, we are reducing the tax, but we are increasing the VAT a little bit, and people are not very upset. But the government will get their money anyway. So rather than deducting from your salary, they'll give you a little bit more money, but at the end, when you're going to spend it, they'll take from you by charging the VAT. So it is just the indirect tax they will take from you anyway. So for example, the income tax is 20%, the VAT is 20%, national insurance is now increasing to 13%. So it's almost like 53% we are paying from our earnings to HMRC or to the government. All right, let's have a look at the next story. Who paid the ultimate VAT? The VAT is paid by the customer. Now, remember that all the VAT come by step. For example, if the person who make the product, so the manufacturer who make the product, first he sell maybe to the dealer. So when dealer buy, maybe dealer pay £20 VAT. And from the dealer adds some profit and dealer sell to the wholesaler. So what happened? Then dealer charge VAT to the wholesaler. And what the wholesaler do? The wholesaler add his profit and sell to the local shop and charge 20% VAT to the local shop. And what the local shop do? Local shop add his profit and charge 20% VAT to the customer. So what happened? All the people except the customer, the local shop, the wholesaler, the dealer, and the manufacturer, they can claim all of their VAT back from HMRC. So they can tell HMRC, listen, every step I'm paying some VAT, can I have my VAT back? And we called it input VAT. We called it input VAT. All the input VAT is recoverable by this business. But the ultimate consumer, for example, people like you and me, who actually consume the product, we buy the product, we use it, we have no place to claim the VAT. So it is ultimately suffered by the consumer, the ultimate customer. On the other hand, the business, they're just acting like an employee on behalf of the HMRC. So basically, the business, they're acting like, okay, I'm collecting the VAT from you. I just working on behalf of the HMRC. So give me your VAT and I'll give it to HMRC. So when you going to eat something in the restaurant, so what happened? They charge 20% VAT. So this VAT they keep in a separate box. This VAT is not charged by that restaurant. They don't charge you the VAT, but they charge you the VAT for HMRC. So they don't keep it for themselves. So this VAT, they give it back to HMRC. But any VAT they paid to their wholesaler, they will get it back from HMRC anyway. So you're going to see how it works. All right, so the main point we're learning from here, there is two things. One is called input VAT. Input VAT. Input VAT means VAT on purchase. VAT on purchase. So that means every time if I buy something, the VAT I paid, we called it input VAT. On the other hand, we have an output VAT. And output VAT means VAT on sales. VAT on sales. So input VAT means VAT on purchase, and the output VAT means VAT on sales. So at the end of the day, we look at how much is the output VAT. So how much VAT we have collected from my customer. For example, if I collected 500 VAT from all my customer from the sales, normally we submit the VAT to HMRC quarterly. Remember that, unless you take a special permission from HMRC to do it yearly or monthly, normally every single company, they have to submit the VAT to HMRC quarterly. And quarterly, for example, January, February, March. So from March, every single company have 1 month, 7 days to submit the VAT return and either pay or claim back from HMRC. Now, for example, if my output VAT is 500, that VAT I have collected from the customer, and we have an input VAT. Input VAT means the VAT that we have paid to our supplier when you make the purchase. So let's say it is 300. So I paid to my supplier 300 and I have collected 500 from my customer. So I have collected 200 more. So this 200 I have to pay to HMRC. Or for example, if my output VAT is 200 and if my input VAT, for example, 300, that means I paid more to the supplier than I collected from my customer. So what I'll do, I will just claim back 100. So claim back. This is a very unlikely you'll claim back the VAT from HMRC because your sales definitely will be more than the purchase. Otherwise, you don't do the business. For example, if I buy the pen for £10 and if I sell for £8, I'm not doing any business. So if I buy the pen for 10, I have to sell it more than 10. So that means I'm charging more VAT because I'm charging more selling price to the customer. All right. So it is normally happen like when you start a business at the beginning, it is possible sometimes you claim a lot of VAT from HMRC. For example, if you start a business, you need to buy a lot of computers, you have to buy some furniture, you have to buy sort of machinery. So you pay a lot of things at the beginning before even you start selling. Only that case, it is possible you might claim a lot of VAT at the beginning, but obviously at the end of the day, you have to pay more VAT that we have claimed back from HMRC. All right, so what you understand from here, this input and output VAT. So input VAT means VAT on purchase and the output VAT means VAT on sale. For example, if I have two customer X and Y, so for example, X sells something to Y. X sells something to Y. So here, X is the seller and Y is the purchaser. So what happened? For X, it is the output VAT because X is selling. So for the seller, it is output VAT. On the other hand, Y is a purchaser. So he's buying. So when you buy, he pays the VAT. For him, it is an input VAT. Very, very important to remember this basic thing. What is input or output? So when I buy something, if I pay the VAT, it's input VAT. When I sell something, if I charge the VAT to the customer, it is the output VAT. All right, so let's have a look what else we have in the chapter. As I said, we have not much thing, just output and input VAT, and just one example here. So let's look at this activity one, very simple example, activity one. So I'll give you 5 minutes to all of you to have a look at this example and tell me what do you think. Which one is output, which one is input? Take your time, 5 minutes, and we'll solve it together after. So here, if you read the question, it says A is selling to B. So A is the seller and B is the purchaser. So for A, it is output VAT because A is selling and B is purchasing. For the B, it will be input VAT. So always the person who buy, he paid the input VAT, and the business who sell, they charge the output VAT to the customer. All right, it's very simple. And is there any question from this one, from anyone? Anyone have any problem to understand this one? All right, very good. Then we move to our next chapter. As I said, on the first chapter, we don't have much thing anyway. It's just the basic. So we'll move on to our chapter number 2. All right. Chapter number 2, we have the VAT basics. Let's look at our chapter overview. Let's have a look what we're going to cover from this chapter. So let's have a look. We have total 8 chapters in the book. We'll see how many chapters we can do. If the chapter is not very big, we can do 3 chapters. If the chapter is a little bit bigger, we can do 2. It depends like how long is the chapters is, because not every chapter will be same, and some chapter could be more time consuming compared to other chapters. So, but we'll try to finish our course in 4 weeks. So obviously within 4 weeks, this course will be done. All right, so let's have a look at our VAT basic. So on the VAT basic, we can look at a few important things. The first one is registration. The first one is the registration. So when a business have to register. Now, first I need to tell you a few things. The first thing I want to tell you, like this is a very misunderstanding some business they have. They think like, if my threshold is 85,000 or more in total from the first day I start the business, from that day till now, if it is more than 85, then I have to register for the VAT. On the other hand, some of business think like, okay, I'll keep counting until it is 85, I don't have to register. But there is a few very clear guideline for that. So let me explain to you how it works. So there is 2 types of registration for the VAT we have. And obviously, like we have a compulsory registration and we have a voluntary registration. Compulsory registration is all about I don't have any choice. I have to register for the VAT. I don't have any choice and I have to do it. Now, obviously, like if I have no choice and I have to register for the VAT, that is called compulsory VAT. With the compulsory VAT, we have a 2 tests has to satisfy. 2 tests means like both tests don't have to satisfy. Within these 2, if one test is satisfied, we have to register for the VAT. The first one is called past or historical turnover. This is the one, is a very common one. Now here we have to look when our turnover, VAT exclusive turnover, remember that, not with the VAT, without VAT, I mean the net sales, when the net sales will be reach 85,000 pound for the 12-month period, we have to register with the VAT. We don't have any choice. Now this 85,000 for how long? I said 12 months. So 12-month period. Now the question is 12 months from when? The day I started the business? No, you have to be very careful. It is not the day you started your business. From that date is 12 months. No, it is last 12 months. For example, let's say, for example, I'm in December. So let's say this month is December. From December, I'll check the last 12 months. So the last 12 months. So that means I'll counting not from January to December, but I'll keep counting from December to January. Very careful with this thing. I will keep counting from December to January, not January to December. So from December, I'll go back 12 months. So from, let's say, Jan. So from December to Jan, I'll count. Now, for example, from December to Jan, I have 80,000 sales. Net sales 80,000. That means we still did not reach the threshold. So what I'll do, I'll move to the next month. So for example, after the December, I have a January next year. And from the January, again, I will check last 12 month. Last 12 month. So this time from January, I will check up to February. So February. So I'm going to cross the January. I don't need the January. So from the January, again, if I see I'm not reaching the threshold, then next month will be February. Then I'll go back another 12 months from the February. So every month I will step in. I will always check the last 12 months. This is the story, not the day I start the business from that to 12. So you always go back the point where it's standing from now 12 months back. Very careful with that. This is the past or historical turnover. The next one, we have a future turnover. Future turnover is quite simple. If I believe in next 30 days, if I believe in next 30 days, my turnover will be more than 85,000. If I believe that, not like I believe next 6 months, my sales will be more than 85, or next 2 months, next 3 months. No, next 30 days. In next 30 days, if I believe, for example, I receive a major contract, I receive, for example, a big order, and I have a contract like every month they will make the same order. So if I believe from next 30 days, my sales will be always like more than 85, then I have to register immediately. Remember that I cannot guess for next 1 year, not for next 6 months, not for next 2 months, next 30 days. And if I'm 100% sure, if I am 100% sure my sales will be more than 85 in next 30 days, that time I have to register for the VAT, and that is linked to the future test. So very careful with that. All right, then we have a deregistration criteria. Deregistration criteria is all about when we have to deregister. That means like before my sales was 85 or more, but for some reason my sales is going down. So if the sales is last 12 months or the next 12 months, if I believe it will be less than 83,000. For example, my sales is now less than 83,000 a year. And if I believe it's not going to be increasing because for some reason my business is not improving or growing up, so I can deregister from the VAT. So I can tell the HMRC, I don't want to register, I want to deregister because my sales will not grow or will not be growing in future. If it is, I don't know when it will be grow. If it is grow more than 85, I will do it again. Then we have advantage and the disadvantage of the volunteer. So volunteer registration is all about you don't have to reach the threshold. If you want, willingly or voluntarily, you can register for the VAT. Now you might thinking like, what's the point I'm going to register voluntarily? Because as soon as I register for the VAT, I have to charge 20% to my customer, and my selling price will go up. So what is the benefit I'm going to register voluntarily? It is possible you can register voluntarily, Because, for example, at the beginning, you have a lot of investment in the business. As I said to you, for example, if you want to open a training center and you needed thousands of computer, you needed thousands of furniture. So what will happen for all of this, buying the furniture, for buying the computer, you need to make a lot of initial investment. So you need to make the investment today. Maybe the sales gonna be started after a few months, 6 months, or after 1 year, but all the investment you have done today. So if you make the investment today, all the money gone from your pocket today. And unless you are VAT registered, you will not be able to claim all the VAT you paid now. You have to wait. You can claim the VAT later on because the VAT can be claimed up to 4 years. It's not you're going to lose the money. But the thing is, like, if you really want some money back for the VAT, only way you can do it, you register voluntarily for the VAT and you can claim all the VAT back from HMRC. So for that reason, there's a lot of company, they may be decided to, or they might be decided to register with the VAT voluntarily. Then we have some exempt supplies. Exempt supplies, for example, like a charity, they don't charge VAT, and also they cannot claim the VAT. For example, if you look at the NHS, for example, a few other NGO or charity or non-profit making organization, so they do not charge the VAT because they are exempt supplies. So there's a lot of charity, you will see they charge only the net amount. Even they earn a lot of money. For example, the university, if you pay fees in the university, they don't charge VAT to you because they are exempted, they are charity. Now, obviously, when you are exempted, you don't charge VAT to your customer. At the same time, the VAT you paid to your supplier, let's say you buy some furniture, you buy some stationery, you will not be able to claim back this VAT from HMRC. So you don't pay, you don't claim. Exempt means you don't pay, you don't claim. Simple as this. Then we have here taxable supplies. The taxable supplies we have here, we have a 3 rate of VAT. Remember that standard rate, that is 20%. Everyone, all of us, you know the VAT rate is 20%, but it is not always 20%. Remember that that's the standard rate. Standard rate is 20%. Then we have a reduced rate, that is 5%, and we have a zero rate. Remember that I have seen a student, they made this mistake in the exam. Zero rated doesn't mean it is exempted. Very careful with that. Zero rated doesn't mean it is exempted. So zero rated means you are still VAT registered and you multiply the sales times by zero. Even though it is zero, but you are not exempted. You still charge VAT zero rated. What is the difference then zero rated and exempted? The difference here is if you are zero rated, you can still claim all the input VAT from HMRC. But if you are exempted, remember that you will not be able to claim any VAT from HMRC. So very careful with that. You have a 3 rate of VAT. Standard is 20%, reduced is 5%, and zero rated is 0%. But the exempt VAT, it is exempt. It is not the rate, it is exempt. So all of these people who register for the VAT, even for the zero rated, they can claim all the VAT back. So can recover all the VAT from HMRC. All right, so all of these things we're going to cover from this chapter. As I said, exempt, they don't have any VAT impact because they cannot recover the VAT or they don't charge the VAT to the customer. Okay, let's have a look. Now we'll look at some question. So see if we can do it. Okay, before we start this activity, let me discuss one more thing. Now, remember that at the beginning we said, like, if I'm a VAT registered business, VAT is not the cost for me. If I'm a VAT registered business, even if I buy something, I pay the VAT, but VAT is not the cost for me, because at the end of the day, I'm going to claim the VAT back. Now, for example, if I am a standard rated supplier, that means I sell everything, I'm VAT registered, and I charge a standard rate, that is 20%. So I charge 20% to all my customers. And obviously, what I paid to my supplier, this is not the cost for me, the VAT. So whatever VAT I pay to my supplier, I'm going to claim back it from HMRC. So for example, if I buy something, I'm a standard rated supplier, I paid 100, 120. So out of 120, for example, 100 is the net and 20 is for the VAT. Even though I paid 120, but for me, the cost is 100 because 20 I'm going to claim back. I'm going to get it back from HMRC. So this is not the cost for me. And if I'm reduced rated, still I can claim back. If I'm zero rated, still I can claim back. But if I am exempt supplies, if I'm exempt supplies, exempt means I don't have to register for the VAT, I'm exempted. That means I don't charge VAT, I don't claim. So for example, in this case, if I pay 120, 120 is a cost for me because I'm not gonna get it back because I am exempt supplier. I don't charge VAT and I cannot claim the VAT. All right, let's look at this one, activity 1, cost to the business. The following business have just paid telephone bill 1200, 1000 plus VAT of 200, so 1200. So 1000 is the net and the VAT is 200 and paid the telephone bill. Now let's say the same telephone bill paid for the 3 type of business, the insurance company, they are exempt supplies, the accountancy firm, they are standard rated supply, and the bus company, they are zero rated supplies. Now question is, what is the cost for them, for which company? So I'll give you 2 minutes, take a look and tell me what do you think. For insurance company, how much is the cost? For the accountancy firm, how much is the cost? And for the bus company, how much is the cost? So what we have here, so for the insurance company, Naira, Neha, you are saying insurance company 1200, okay, because they are exempted supply, they will not be able to claim it back. That is absolutely true. So this is the cost for 1200. So I think most of you are right. Yeah, that's correct. For the insurance company, it is 1200, yes. And for the accountancy firm, it is 1000. This is correct. Because if the accountancy firm, even the accountancy firm, they are paying 1200, but actually 200, they will get it back because they are standard rated supplier. And also for the bus company, it is also 1000 because they are zero rated. Even though they are zero rated, but they are not exempted. Very careful with that. If you are exempted, you lose everything. You will not be able to claim anything. But if you are standard, if you're zero rated, if you're reduced rated, you can claim all the VAT. All right, so any question from this one, from anyone, before we move to our next topic? All right, very good. Let's move to our next one then. The next one we have a registration. So registration, all of us try to answer the question. If you answer when I ask something, you will remember it for long. Okay, this one we have discussed earlier, the compulsory registration and the voluntary registration. So you can see here we have a historic test that is the last 12 months, the previous 12 months, the registration will be previous 12 months exceed the registration limit 85,000. So 85,000 is the threshold. Last few years, the registration limit is still same. It is 85. And the future test next 30 days, as we discussed, next 30 days, if I'm very much sure it will exceed the 85,000, only that time I have to register. All right, now I say taxable turnover. Remember this word, taxable turnover. Taxable turnover means 3 things: zero rated turnover, reduced rated turnover, and standard rated turnover. Remember that if I sell, for example, even 90,000, but on this 90,000, if I have 10,000 for the exempt supply, do not take the exempt supply. Very careful. So you need to add only these 3, like that one, zero rated and reduced rated and the standard supply. Do not take the exempt supply. It is not part of the taxable turnover. All right, so we have the next topic here. So let's look at some example. If you have any question, please make a note. After the lesson, I will ask you if you have any question. You can ask me that time. All right, so the next one we have here, standard rated supplies. We have a zero rated supply. If you look at this question, let's try to understand it. Illustration 2, historic test. Jack started his business on 1st July 2021. His monthly VAT exclusive turnover. So standard, I have 7,000. Zero rated, I have 2,850. This is per month. So his monthly. And the exempt supply is 600. So total, we have 10,450 per month. Calculate the VAT exclusive taxable turnover for each month. VAT exclusive, remember that, without VAT, VAT exclusive. So 85,000 has to be VAT exclusive. So standard plus zero rated. That means I'm going to take 7 plus 2,850. Do not take the exempt. So do not take the exempt supply when you calculate the 85,000. So taxable turnover is 7,000 plus 2,850. So per month, 9,850. So work out when 85,000 registration limit will exceed. So up to maximum of 12-month period. After 8 months, total is 78,000. So it is still not 85. So after 8 months, we did not touch the registration threshold. After 9 months, we are 88,650. That means we crossed the threshold, that is 85. That means when I'm in March, 31st of March, that means I reached the threshold. From 31st of March, I have 30 days. Remember that. I have 30 days to tell the HMRC, like I have reached the threshold, so I need to register for the VAT. So once I touch the threshold, from that day, from that month, I have another 30 days to tell the HMRC. So that means if I reach the threshold in 31st of March, by 30 of April, by next 30 days, that means next 30 days mean 30 of April. Therefore, after 9 months, Jack must register for the VAT within 30 days, example by 30 of April. So I can do 7th of April, 10th of April, but within next 30 days, I have to register with the VAT. And the registration will be start from end of the 30 days period. So that means here it is 1st of May. So I reach the threshold on 31st of March. Within 30 days, I have to tell the HMRC. And after finishing the 30 days, the beginning of the first month or the following month, my registration will be started. So if I touch on 31st of March, by 30 of April, I have to tell the HMRC. From 1st of May, my VAT registration will be started. All right, the next one, we have a future test. The future test is quite simple. As I said, if I'm very much sure in next 30 days, I will touch the threshold. So for example, I have future test. Orla has been in business for many years with VAT exclusive, and we have approximately 6,500 per month. So that means 78,000 per annum. Also has not yet had a registration under the historic test. So the historic test is fine. On 24th of November 2021, Orla won a major contract, which will immediately bring additional income, 78,000 per month. So suddenly he win a contract or she win a contract, and she understand from now every single month from now, every single month the sales will be 78,800 more than 6,500. So it will be 78,000 plus 6,500 per year. So it will give me total 85,300 every month. So I'm very much sure because I already get the contract. For that reason, taxable turnover in the next 30 days alone will be 85. So which exceed the threshold, and Orla must register for the VAT immediately without delay. So if I'm very much sure within next 30 days, I'm going to cross the threshold. So the future test, I don't have to wait 30 days. I have to register immediately. But I have to be very much sure in 30 days, next 30 days, my income or my taxable turnover will be more than 85. All right, so let's have a look. Our next question. So we have activity 2. Let's try this one, all of us. So I'll give you 5 minutes to have a look, all of you, and tell me what you think when Mark need to register. So it's a when will Mark breach one of the registration tests? So either the future or either the test, either the future or either the historic test. By what date he required to notify the HMRC? That means next 30 days when he reached the threshold. When will Mark be registered for the VAT? So once the 30 days period will be finished, he need to register for the VAT. So this is the story of each quarter. So do some workings and tell me what you think. I'll give you 5 minutes. The first thing we have to look here, what is the information we have here when he need to register for the VAT? So the trading is started on 1st of October 2021. Trading is started 1st of October 2021. And he makes only taxable supply, so you don't have to worry about is he make any exempt supply, we have to take it out. No, we don't have to worry about that. The turnover net of VAT for each quarter has been shown below. Each quarter, that means quarter means 3 months. Remember that. So here, when you have 18,000, that means 3 month figure here. So you have 3 months. So per month 6. The turnover is spread evenly over the quarter. So let's have a look. Now, if I added, for example, few quarters, so 3 month, 6 month, 9 month, and 12 month. So if I added the 12 month, for example, the last 12 month, how much we have here? So for example, if I add all of this, so 18 plus 18 is 36,000 plus 22,800 plus 24,000, and that gives me 82,800. So if I added all of this, that gives me 82,800. That means I'm still not on the threshold when I am in 30th of September. So during this 12th month, I checked, I'm not still crossing or touching the threshold. So what will happen now? I have to move on. I have to go to the next month. So from the September, I move to October next month, and I take 1 month off from the beginning. So I'll add 1 month. So for example, if I add 1 month after September, the next month is October. So if I take the October from here, so I have a 3 month, 25,500 for 3 months. If I divide by 3, so 25,500 divided by 3, that gives me 8,500. So 8,500 I will add that for the next month, that's for the October. And I have to take it out 1 month from the beginning because I cannot take 13 months. I only can consider 12 months. So if you remember, we have a 31st of December here. That means we have October, November, December, 3 months. So 1 month I have to take out from here. So 18,000 was for 3 months, divide by 3. So 6,000 for 1 month. So if I minus the 6,000 from 1 month from here, now I have 12 months again. So if I do that, so I said 82,800 plus 8,500 minus 6,000, and that gives me 85,300. And I reached the threshold. When? On October. So we understand on 31st of October, we reached the threshold. So the first question is when Mark will breach one of the registration tests. I will say number A is 31st of October 2022. So the next one is by what date he required to notify the HMRC. We know within 30 days, isn't it? So if we reach the threshold by 31st of October, by 30th of November, so by 30th of November, I have to tell the HMRC, listen, I have to register with the VAT because I have reached the threshold. And from what day the mark registration will be started. So when mark will be registered for the VAT. Number C. So after the 30 days over, the beginning of the month of the following month, it will be our starting of the VAT registration. So that means, so the whole November is my time to tell the HMRC from 1st of December 2022, my registration for the VAT will be started. So this is the story of the registration. All right, so any question from anyone to understand this one, the registration activity 2? Any question from anyone? Very good, Neha. Very good, Hiba. Anyone have any question? All right, very good then. So we move on to our next question. The next one we have here, another question for the registration. It says, you have the following information about the taxable supply of 3 business, okay? Required for each of them indicate whether they need to register for the VAT immediately or monitor turnover and register later. Tick one box on each. So they have to register right now, or they have to monitor or keep checking or keep looking and register later on. So let's have a look. The first scenario is said, a new business with an expected turnover of 8,000 per month for the next 12 months. A new business with an expected turnover of 8,000 per month for the next 12 months. Be careful. Remember that it's a expected turnover for the 12 months. Remember that we cannot take expected turnover for next 12 months. We can only take next 30 days into consideration, not next 12 months. Even though next 30 days, I have to 100% sure this will cross the registration threshold. Remember that. I have to be 100% sure. If I'm not, then no. So I cannot guess next 12 months my business will make 8,000 per month. So I have to keep looking to see if it is crossing the threshold. Only that time I have to do it. So I'll say monitor and register later. The next one is says number B. An existing business with a total turnover of 79,000 for last 11 months. Sales for the next 30 days are not yet known. So you already have 79,000 for the last 11 months. We're very close, only 6,000 we need. But for the next 30 days, we are not sure we're going to make any sales or not. How much it is, we don't know. So what we'll do, again, if I'm not 100% sure, remember that we never register just guessing or assuming like my sales will be more than 85. Unless I'm 100% sure, I don't do it. So I'll say monitor and register later. Number C is said, an existing business with a total turnover of 7,500 per month for the last 12 months. For the last 12 months, it was 7,500. So 7,500 times 12, that is 90,000. That means we have to register now. It's a register now because last 12 months is the historic test is already reached the threshold. All right, any question from anyone from this one? Activity 3, any question? All right, very good. Let's move to the next one. Okay, so we have some advantage and disadvantage here. Let's have a look. What is the advantage of volunteer registration and what is the disadvantage? We already explained that, but just quickly have a look. The advantage is recover all the input VAT. So how much VAT I paid, I can claim it back. Discipline, I'll learn earlier how to claim the VAT. Avoid late registration penalty. So I don't have to keep on eye when I have to register. So if I just register voluntarily, I don't have to keep checking because I'm already registered. A small business may appear to be more established and creditable. So when you are VAT registered, maybe you feel better, the business looks good, like their VAT registered, maybe it's a good business. The disadvantage is admin burden. So you have to pay some extra money to the accountant, or you have to keep the record. So it's extra headache for you, extra admin work for you. Risk of penalty and error. So for example, if you made a mistake, send the wrong VAT return to HMRC, they might give you the penalty. So unnecessary headache. Price go up for non-VAT registered customers. So basically, when you start charging VAT to your customer, they have to pay extra 20%, and maybe you're going to lose the customer because they will think like, okay, they're charging VAT, I'll go somewhere else. So this could be the disadvantage. All right, let's have a look at the next one. The next one we have here, voluntary registration, activity 4. So choose one reason why a business making taxable supplies might choose not to register for VAT voluntarily. So what is the reason behind? They will think, no, I don't want to register for the VAT voluntarily. So what is the reason? They might think, I don't want because this is the problem. So we have preparation of the VAT return will be required. That's the reason, isn't it? So if you register voluntarily, you have to submit the VAT return. Customer will be benefited by able to claim the input VAT. That's the advantage. It's good for me. The business would benefit being able to claim the input VAT. This is also good. So there is nothing wrong with that. Only the problem is this one. So the preparation of the VAT return would be required. So this is the one will give me extra burden or extra admin work. So for that reason, I might think I don't want the VAT. All right, so we have a deregistration. We have talk about it. So if it is 83,000 for the 12-month period, VAT exclusive value. So you can say like, I don't want the VAT registrations. You might think I want to deregister voluntarily. So you can always do that. If a business is making taxable supply, it must deregister. For example, if you think from now, I'm not going to make any exempt, I'm not going to make any taxable supply, I'm going to make only the exempt supply, then you have to deregister immediately. The business must inform the HMRC 30 days of ceasing the taxable supply. This sort of question, very common on the MCQ question. They'll ask you true or false. So make sure you make a note. Every single line is important. You need to make a note. You remember all of this. Failure to register. So if you failure or if you don't register on time. So for example, you're supposed to register on June, but you remember on December, like, oh, I supposed to register on June, but I forgot. I reached the threshold on June. So what you will do? So in June, maybe you reach the threshold 85, but you find it out on December. So what will happen? You need to see like from June to December, how much sales you make. So let's say you make 10,000 pound sales. Even though you did not charge any VAT to the customer during this 6 months, because you never know you have to register for the VAT, you never knew that, but HMRC will still think it will be VAT inclusive amount. So HMRC will say, listen, you forgot or you didn't check, it's your problem. So we will think from June, you're supposed to register for the VAT. We will calculate how much sales you make from June till now, and we'll see how much VAT it's supposed to be, or it would be if you charge the VAT, and we're going to take the VAT from you. So they'll think this 10,000 is a VAT inclusive amount. They'll find how much is the VAT can be inside if you charge the VAT, and they will take the money from you. This is number one. Number two is you can call all of your customer from June to December. You make a sale to them and you tell them, listen, I forget to charge the VAT, but I didn't charge, so I forgot. So can you pay the VAT now? This is very unlikely customer going to pay you the VAT after. So mostly like whatever you make a sale, you have to pay the VAT from your pocket because you forget to register. So there is two options. Treat the sale as a VAT inclusive and pay the VAT on profit from the profit, and treat the sales as exclusive and try to get extra money from the customer. This is very unlikely. Customer will come back to you, just pay the VAT. All right. So let's move on to our next one. All right, so this is chapter number 2. Let's move to chapter number 3. And before we start chapter number 3, we'll take a break. Let's take a 20-minute break. We come back 7:40, and we'll start from chapter number 3. We'll see if we can do our chapter number 3. We can complete if we can. So I will see you in 20 minutes time. So chapter 3 is all about the input and output VATs. Here we're going to look at how to calculate the input and output VATs, and a few more calculation we're going to look at from this chapter. So let's have a look at our chapter overview. What we have in this chapter, we have an input and output VATs. We have inputs and output VAT. What is input and output VATs? You already know that. Now the next thing we have here, calculation of the VAT. So on the calculation of VAT, we have two things. One is inclusive of VAT and one is exclusive of VAT. Inclusive of VAT means VAT is already included inside. For example, if I said 120, and if I said VAT inclusive or VAT included, that means the VAT is already inside. And the way we take it out, or if we find it out how much is the VAT, we do 20 divide 120. So how much it is here? We do 20 divide 120. So for example, if I have a 120, we have to do 20 divide 120. So basically the way we can find it out very easily, if you do the simple math, that's the fraction is 6 here. So obviously, like if the fraction is 6, rather than you always do 20 divide 120, you can always just do divide by 6. It will give you the same result. For example, if someone asks you how much is the VAT inside of 120, so you do 120 divide 6, and the VAT is 20. Rather than you do all the calculation 20 divide 120 and you multiply with that, so that will give you the same figure, but at the end, like it will take some time. So the VAT is always the way we calculate. We said like how much is the VAT inside, that's inclusive VAT, and the exclusive VAT is quite simple. The exclusive VAT means like this is the net amount and the VAT is not inside. That means, for example, if my net amount is 100 and if the VAT rate is 20, that means the VAT will be 20. So there is no VAT inside of this 100. So VAT inclusive means the VAT is already inside. If the VAT is already inside, you have to divide by 6. And if the VAT is not inside, that means it's exclusive VAT. All you have to do, you have to multiply by 20 to find out how much is the VAT inside. That's all. The next one, we have irrecoverable input VAT. Irrecoverable input VAT, like some of the input VAT we have, that is not possible to recover. That means like even though I paid the VAT, but I will not be claiming back from HMRC. And there are few sort of transactions, there are few sort of areas that we do, and we are not allowed to claim the VAT. For example, the business entertainment. So if you invite all of your customer, for example, all the customer you invite for the Christmas party, or you give a gift to your customer just to entertain them. So if you do like that, the things you buy for your customer and you pay the VAT, you are not allowed to claim it back. Then, for example, the car. If you buy a car, you are not allowed to claim the VAT. And also the private use item. If you buy something for the private use, you are not allowed to claim the VAT. Now, for the car and for the business entertainment, we have a little bit exception. For example, if the business entertainment for the UK customer, then we are not allowed to claim the VAT. But if it is for the non-UK customer, then how much we paid, we can claim the VAT back. For example, if you have a client come from Dubai, or if you have a client come from USA, for any other country, not from UK. So for example, if you pay for their food, if you pay for their hotel, for the accommodation, so anything you paid, you can claim back the VAT on that expenditure. But if your customer is from UK, then you will not be able to claim the VAT back. On the car, any sort of car, for example, if you buy a private car for your employee, if you buy a car for the director, for the salesman, for anyone, the VAT you paid when you buy the car, you are not allowed to claim the VAT from HMRC. But if the car is basically for the business, for the business means the business is depends on the car. For example, the driving instruction. So the driving instructor, he will not be able to run his business unless he have a car. Or for example, you have a pool car. Pool car means like sometimes the office have some car. This car like used to bring the employee from the home to office. Or after the office, this car drop the employee. So all the employee together, they get in the car. So it's called pool car. So where everyone sit together. If this is for that reason, then you are allowed to claim the VAT, otherwise not. For the van, it is a little bit different. If it is a van, then you are allowed to claim the VAT, even though you use the van for private use, you can still claim the VAT because van is always treated like something going to use for the business. All right, the next thing we have here, it is called partially exempt traders. Partially exempt traders. Here, partially exempt traders is basically when a business not only supply the standard product or the standard thing, but also they supply the exempt supply as well. So when you have a mixed supply, for example, some of your product is standard rated and some of your product or service is the exempt supply. For example, if you go to Tesco, there you will see like there is a lot of product is a VAT and some product don't have the VAT because it is exempt supply. For example, the children clothing or children milk, this sort of product is exempted from the VAT or non-luxury thing. So this sort of thing, there is no VAT. So it is possible one business can have a mixed supply. Some of our taxable, some of are exempt. So what we do on that case, so this sort of business, we call it partially exempt traders. Now, when we have this sort of business, we look at, can this business claim all the VAT they spent? And some of the VAT, for example, that is relevant to the taxable supplies, some of the VAT relevant to the exempt supplies, but some of VAT, it cannot allocate it. For example, let's say, for example, that the Tesco have a store and it's a big store. And in this store, every shelf have a different product. And let's say, for example, in one shelf, some product is standard rated, so you have to pay 20% VAT, and some product is exempted. Now, if you look at the rent for the whole premises, or if you look at the, for example, the electricity or the heating for the whole building, you pay the VAT. Now, inside of this whole premises, some product is taxable, some product is exempted, you sell. Now, the question is, can you claim all the VAT on the rent? Can you claim all the VAT on heat and lighting, on the electricity? So when we have the common purpose we using and we have a mixed supplies, that time we have to do a test and we called it de minimis test. So de minimis test will help us to determine, can I claim all the unallocated VAT? Because this one, I cannot, for example, the heating for one shelf, let's say £1,000, we have like heating or electricity bill. And I don't know, shall I allocate it to the taxable or shall I allocate to the exempt because I sell both product or both service, what shall I do? In that case, we're going to use the de minimis test to identify it. And after that, we will see, can I recover all the input VAT or not? The final one we have here, overseas transaction, that is import and export, is quite simple now. So if I buy something from outside of the UK, we called it import. Now, when you buy something, remember that the supplier will not charge any VAT. But when you buy the product, for example, if you buy something from Bangladesh, for example, if you buy a lot of clothing from Bangladesh, and when you buy it, you don't have to pay anything to the supplier. Supplier will not charge you the VAT. But when you receive it on the Heathrow airport, they have a customs department. They will keep hold your goods. They will keep hold all the clothing, and they will tell you have to pay the VAT, the tax, and to take out all of your product. So all you have to do, you have to pay the VAT on the customs to take all the goods out. And after that, once you have the VAT return, you can claim back all the VAT. So actually, there is no impact. It is a neutral. even though you pay some VAT when you buy some product from different country, but later on you can claim it back. So input VAT, you don't pay VAT to the supplier, but you pay the VAT on the customs on the border, but later on you can claim it back. When you sell something from UK to any other country, we call it export. And export is zero rated, there is no VAT on that. All right, so this is all we're going to look at from this chapter. So let's have a look. First thing, our input and output VAT. So let's have a look. The first one. The first one, it says inclusive price. Remember that as soon as the question said VAT is included, you always divide by 6. VAT is inclusive, divide by 6. So divide by 6 means 20 divide over 120. So make it simple, we make it divide by 6. You have learned this thing on your level 2 as well, how to find the inclusive VAT. But always remember, inclusive VAT means divide by 6. So they said VAT inclusive price is 642. VAT inclusive price 642. Required, calculate the VAT solution here. How much is the VAT here? Very simple. So we do 642 divided by 6 will tell us how much is the VAT here, and that is 107. So 642 divided by 6 is 107. So if the VAT is inclusive, always divide by 6. All right, the next one we'll look at here, calculating the VAT on net amount. This time, the VAT is not inside, but VAT is a net amount. That means we have to calculate the VAT. It is exclusive VAT. We need to know how much is the VAT. The net amount is 54.89. That means there is no VAT inside, but we have to know how much is the VAT. How much VAT should be charged? So net is always 20%. Remember that. VAT rate is always 20 standard rate. So all you have to multiply by 20% here. It's very simple. So 54.89 times 20%. And that will give us 10.97. This is our net VAT. So if it is an inclusive VAT, divide by 6. If it is an exclusive VAT, times by 20%. Remember that. Now the next one, it says how we calculate how much we need to pay or how much we need to claim back. Simple as this: output VAT minus input VAT. If the output VAT is more than input VAT, then we have to pay to HMRC. If my input VAT is more than output VAT, we claim back from HMRC. All right, so let's have a look. This is the formula. You can see it's very simple. Let's look at activity 1. So let's look at the activity 1. So I'll give you 2 minutes to tell me, shall we pay to HMRC or we claim back from HMRC, and how much it is? Activity 3. All right, so Heba said A. No, it's like the last one. I think, Peter, you said C, and Heba said C. And Sakura, you said C as well, 100 paid or reclaim. Okay, let's have a look what it is. So the first thing we have to identify how much is the output VAT. Output VAT means VAT on sales. So let's have a look how much is the VAT on sales. So sell goods 1800 inclusive VAT. Sells goods 1800 inclusive VAT. That means VAT is already inside. So 1800 is inclusive. How we find it out? How much is the inside VAT? Divide by 6. Divide by 6. So 1800 divided by 6 will tell us how much is the output VAT. So 1800 divided by 6, that gives me £300. And that's my output VAT. Output VAT means VAT on sales. The next one is says purchase. So buy good is a purchase. Purchase is excluding VAT. That means the VAT is not inside. So times by 20%. So 1000 times by 20%. So it is 200. So that's my input VAT. So output VAT is 300, input VAT is 200. So the difference is 100. I have collected more VAT from my customer because VAT on sales means output VAT. So that means I have collected more VAT, 100 more from the customer. This 100 I have to pay to HMRC. So pay HMRC. I'm not going to claim back. I have to pay it to HMRC. So £100 will be paid. Very well done. So all of you who done number C, very well done. All right, any question from this one, from anyone? Anyone have any question from this one? All right, very well done, Joy. Very good, good win. So let's move to the next one then. So let's have a look what we have here. The next one we have like irrecoverable VAT, that's we have discussed before. Let's read a little bit quickly before we go to any question. It's a business entertainment. Business entertainment, the VAT is not allowed to be reclaimed. So the input VAT incurred on business entertaining is not recoverable from HMRC. However, does not include the following. So exception we have for two. One is staff entertaining. So if you make a Christmas party or if you make an Eid party, so what you do for the staff, if you do any staff program, so if you buy something for the staff, if you give a gift, if you entertain your staff, so how much VAT you paid, you can claim it back. On the other hand, if you entertain the non-UK customer, remember that, non-UK customer. If you entertain the non-UK customer, you can claim the VAT back. If you entertain the non-UK customer, we can claim the VAT back. But if from UK, no. If from customer from UK, no. If you entertain the customer, no. Only entertaining the staff is allowable, and only if the customer from different country, not from UK. To recover of input VAT, where there is a mixed group of staff and the non-staff entertained would be apportioned appropriately. So let's say you make a party, some of us is staff and some of your customers, you have to apportion it. You have to know how many percentage was staff and how many was the customer. So for example, £100 VAT, you can only claim 50, not 100. If it is 50-50. The next one, we have a car and vans. Car and vans. So remember that car, we cannot claim the VAT unless the business depends on the car. As I said, it can be a pool car where everyone use this car for going and come back to the office. Within a taxi business, so if your business depends on the taxi, because without taxi, you cannot do the business. Also, if you are a self or for driving instruction, so you are a driving instructor, so your business depends on the car. So if this is the case, only that time, or if you are a self-drive hiring business, if your business depends on that car, you can only claim the VAT, otherwise you are not allowed. So if you buy a car for your salesman, if you buy a car for the director, no, you cannot claim the VAT. For example, new car for employee, we reclaim the VAT, input tax recoverable and purchase, no, we cannot claim the VAT. And when we cannot claim the VAT, we're not going to charge the VAT when you're going to sell that car. For example, in future, if you sell this car, we're not going to claim the VAT on that. So it's a no, it is exempted. When you will sell it, it will be exempted. But when you buy it, we cannot claim the VAT. And if the car used in a taxi business, can I claim the VAT? Yes, I can. But if I sell this car, I also have to charge the VAT to the person going to buy from me. So we have to charge the output VAT. The van is both used, it doesn't matter. The van is used for the business or not. Van is van. All right, let's have a look. The next one. So this one we have here, activity 4. Let's try this one together. It's a reclaiming input tax. Identify whether input tax can be reclaimed by a VAT registered business in each of the following circumstances. So we have few scenario here. The first one is says input tax incurred on entertaining prospective new UK client. So what do you think? If we entertain the UK client, can I claim the VAT or I cannot? So you say yes, can reclaim, no, cannot reclaim. The answer is no, because it is a UK client. If the client from overseas, from different country, not from UK, The answer is yes, but for this one, no. Then input tax incurred on a new car for a top salesperson. So for the salesman, I buy a car. Can I claim the VAT? Yes or no? The answer is no. We cannot. Doesn't matter, he's a salesman or director, he cannot claim the VAT unless the business depends on that car. Input tax incurred on a car for use in a driving instruction business. The car used in a driving instruction business. Can we claim the input VAT? The answer is yes, we can. Because if the business depends on that car, then yes, we can claim the VAT. All right, any question from this one from anyone? Activity 4, reclaiming the input tax or input VAT. Anyone have any question? All right, very good. Let's move to the next one then. The next for the fuel. Now the fuel is a little bit different. Remember that if I use the fuel for the business, I'm allowed to claim all the VAT. For example, if I use all the petrol and if I know I use all the petrol for the business travel, then I can claim all the VAT on the petrol. But if it is not, sometimes what happens, like you buy a car for your employee, or sometimes you have a car, this car is used for both private and for both business as well. So private and business both. If this is the case, we have to keep the record of the mileage. For example, if I drive for 1 month or for 1 quarter, 10,000 mile, and if I know 5,000 for the business, 5,000 for the personal, so I can only claim the 5,000 on the business. The private one is not allowed to claim the VAT. So this is for the fuel. Now, this is number 1. I have to keep the mileage so that I can claim only the VAT on the business mile. The next one, if you think like, I don't like to keep a record. I want to claim all the VAT, but I don't like to keep a record. So if you don't like to keep a record, you can still claim all the VAT that you pay for the petrol, but you have to pay something called fuel scale charge. So you have to pay a fuel scale charge. Fuel scale charge is given in the exam. It will set up by the HMRC, so you don't have to worry how much is the fuel scale charge, how is it calculated. It's calculated based on what type of car you have. So for example, the CO2 emission, so if it is 50 gram, 100 gram, or it is electric car or diesel car, petrol car, so the CO2 depends for the fuel scale charge. So it will be given in the exam, so don't have to worry. So if you pay the appropriate fuel scale charge, you can claim all the input VAT that you spend on the petrol, even though you don't keep any record. So you can claim everything for private and business both. And the last option is you don't claim the VAT at all. So you don't keep a record, you don't pay the scale charge, and you don't claim anything. So you don't do anything. 3 options. The first option, either you keep a record, business and private. The next option is you pay the scale charge, claim all the input VAT, regardless for the business and private. Third one, you don't do anything. Simple as this. All right, let's have a look at the next one. So let's look at our activity 5. Activity 5 said reclaiming input tax on private fuel. Decide whether each of the following statement is a true or false. Okay. It's a VAT registered business can claim all the input VAT on road fuel if it keep detailed record of the business and private mileage and make no other adjustments. So if you keep the record, how much is private and how much is business, you can claim all the VAT, how much you paid. Is it true or false? Here, the answer is clearly false, isn't it? Because if I keep a record, I can only claim the business portion, not the private. Very careful with that. Even the question try to make you confused, like, oh, if you keep a record, you can claim all the VAT. No, if you keep a record, you can only claim the business portion, not the private. A VAT registered business can reclaim all the input VAT on road fuel if they pay fuel scale charge for the private mileage. This is true, isn't it? So if you pay the fuel scale charge, then you don't have to keep the record, and you can claim all the input VAT. So if you want to claim all the input VAT, you have to pay the fuel scale charge. That time you don't have to keep the record for private and the business. And if you don't pay, then you have to keep the record. You can only claim for the business. All right, any question from this one from anyone? Activity 5. Any question? All right, very good. Let's move to the next one then. The next one we have here, that is called partially exempt traders. As we discussed before, partially exempt traders are the traders, they make both supply. They make taxable supply. The question you can see here, make taxable supply and the exempt supply. So they do both supply. And for that reason, sometimes some of the VAT is very hard to allocate. Is it exempt or is it taxable? As I said before, the example, for example, the Tesco sale and the rent or the electricity they paid for the whole premises, and every single shelf have a mixed supply. Some are taxable, some are exempt. And for that reason, the VAT we paid on the rent, on the electricity, it is very hard to say, is it for taxable or is it for exempt? So it is called unallocated amount. So can I claim this VAT back or not? It depends on the test. What is this test? We called it de minimis test. So let's read this one quickly. It says, how much input VAT a taxable person can reclaim is determined by the type of supplies they make. A taxable trader making only taxable supply, standard, then reduced or zero rated, can reclaim all their input VAT, subject to exception noted above. An exempt supply can making only exempt supply cannot reclaim. So if you are a standard, that means you can claim everything. If you're exempt, you cannot claim anything. But what happens if you are both supplier? Then these are called partially exempt traders. So when you are partially exempt traders, what happened? So it says, partially exempt traders only charge output VAT on their taxable supply. So only charge output VAT on their taxable supplies, then can reclaim all the input VAT on all purchase directly related to taxable supplies. So if I know this is the taxable supplies for this product or this service, I can claim all the input VAT. Can reclaim a proportion of input VAT which is not directly attributable to the taxable or exempt. This is based on the following calculation. So when I'm not sure is it taxable or is it exempt, I cannot allocate it, then I can claim only the partial. I can claim only the proportion. What is the formula? Input VAT not directly attributable to the taxable or exempt supply. So this one, I don't know, like for example, 500, it is not belongs to taxable, it is not belongs to exempt, it is just unallocated. So I put this amount here and multiply by a value of the taxable supply made. So how much taxable supply made and total supply made. So taxable supply in the top and total supply made. Total supply means taxable plus exempt. And after that, what is the percentage coming here? We have to make round up to the nearest person. For example, if it is 56%, you need to make it like, for example, something point something, you have to round it up. Anyway, we're going to look at how is it work. The rest of the input VAT is only recoverable if it is below the diminished limit. If it is below the diminished limit. Now, what is diminished limit? Diminished limit have to fulfill two conditions. The first condition is the average VAT has to be less than 625 per month. So average VAT, for example, if the VAT is 3 months is 1500 for the quarter, so divide by 3, so per month is 500. So it has to be less than 625. If it is more than 625, we will not be able to recover it. And also, it has to be less than 50% of the total input tax for the period. For that period, how much is the total input tax? For example, if the total input tax is, for example, 10,000, so 50% of that will be 5,000. So total of this tax cannot be more than 5,000. So two condition has to satisfy. Okay, this will be a little bit tricky, but it's a very hardly come in the exam. You really don't have to worry too much. Even if it is come in the exam, it will not come more than 2 marks, just to ask you a few questions. All right, let's have a look at this question. They are saying partially exempt traders. So we'll look at this question, activity 6. Now we can look at here, this person selling both taxable and exempt supplies, and the total input tax, that means total VAT for this period, is 23,700. This is the total VAT for the whole quarter, is 23,700. Now out of this 23,700, 20,000 is taxable. This one is very clear, only for the taxable. So I can claim all the taxables. I can claim everything, is very simple for me. Then exempt is 700. I cannot claim, so cannot, because I know this one, it is exempt. And unallocated, this one, it will not go to exempt, not go to taxable, is on the middle. Now unallocated, I have to use the formula. I have to use the formula for that. Now, after that, I have to decide, can I claim all the 23,700 or not? It depends on the calculation. So let's have a look what it is. Here's the total turnover for the quarter is 135,429. That's the total sale for the whole quarter. Which taxable supply is 114,573. So he make a total sales. Total sales is 135,429. And out of that, taxable is 114,573. So we have this information. Okay, now the question is, how much of the input tax? So our total input tax is 23,700. So this 23,700, can I claim back everything, or how much it is? So how much of 27,300 input tax recoverable by Jim? So let's have a look. So first thing we have to know the allocated and the unallocated amount. So directly allocated, so we have a taxable supply. So taxable supply, I can allocate 20,000 directly. So 20,000 I can allocate directly, because the question tell me 20,000 is relevant to the taxable. So I have no problem to understand that. Indirectly allocated, here's the problem. I have 3,000. This 3,000, I don't know how much will be taxable, how much will be exempt. For that reason, you have to use that formula. Remember the formula we checked before. So what is the formula? So this is the amount 3,000, and we have to do times. On the top will be the taxable supplies. That is 114,573. And on the bottom will be total supplies. That is 135,429. Now, if you do that, for example, 114,537, and if you divide with 135,429, so you will see it will come 84.6%. So this one is 84.6%. But if you remember, the question said round up to the nearest person, so you have to make 85%. So out of 3,000, 85% belongs to taxable supply. So we say 3,000 times 85% belongs to taxable supply. So how much it is? So it's a 3,000 times 85%. So 3,000 times 85%, that is 2,550. 2,550. Okay, so this gives me the total, that is 22,550. So this is my taxable supply, and I have no problem because I know I can recover everything. So this is recoverable. This is recoverable. I can recover everything because taxable, I have no problem. The question is the exempt one. Can I claim the exempt one or not? Now with the exempt one, exempt supply, the directly attributable. So I know this 700 relevant to the exempt. So 700 directly is gone. And from the 3,000, if you remember, we take 85% to the taxable. That means 15% belongs to the exempt. Or you can make the difference between 3,000 minus 2550, same story. So it will give you how much? 450. Thank you, Hiva. So 450 is indirectly allocated 450. So how I get this one? 3000 times 15%, or you can do 3000 minus 2550, it will give you the same figure. So now I can see I have total 1150. Now the question is, this is the question mark. Can I claim this 1150 back or not? The answer is depends on the diminished test. Remember the diminished test, two conditions. The first condition is has to be total less than 625 per month. Now this is 1150 for 1 quarter. That means for 3 months. So if I say 1150 divided by 3, so how much is per month? So 1150 divided by 3, that will give us 383 per month. So that means this is less than 625. So the first condition is fulfilled. Then I have to look at the next condition. The next condition is has to be less than 50% of the total input tax. Now total input tax, if you remember, it was 23,700. If I divide by 2, or we can make 50% is the same story. So if we say it 23,700 divided by 2, let's quickly look at the formula once again. They said 50% of the total input tax. Yeah, so 50% of the total input tax. So if I make 50% of that, 23,700 divided by 2, that gives me 11,850. And this 1150, it is definitely less than 11,850. So that means the second condition is less than 50% of the input tax, less than 50% of the input tax, it is also satisfied. So I have to reclaim only 1150 that satisfy more than like our input. That is, my 50% is the input is 11, and 1150 is very less than 11,000. So this is satisfying, and also per month it is less than 625, satisfied. So both conditions are satisfied. That means our recoverable amount will be, I can recover all this 22,550 plus I can also recover this 1150. So I can recover everything because it fulfilled the diminished test. This question you have to practice a little bit because it could be tricky, but if you practice a little bit, it's not that difficult. So hopefully if you watch the video once again, and if you practice yourself, it will be more clear anyway. All right, any question from this one from anyone? Anyone have any question from this one? All right, very good. Then we move to the next one. The next one, we have one more question. That is partial exam traders, so multiple choice. It says a business supply goods that are a mixture of standard and exempted and zero rated. Which of the following statement is true? So statement 3 say all input VAT can be reclaimed. No, it is not necessary. Until the diminished test is satisfied, we will not be able to claim all. None of the input VAT can be reclaimed. That's not true. We can claim back the VAT. All input VAT can be reclaimed provided certain condition meet that's diminished. That's the true one. So if the diminished condition fulfilled, we can claim all the input VAT, even though it is exempt or taxable. All right, let's move to the next one. The next one, we have import and export. This is quite simple. As I said, if we sell from UK to the USA, we called it export, and export is zero rated. So simple as this. And if we buy from other country to UK, we called it import. Import is a little bit tricky. So let's say we buy from USA to UK. So USA will not charge any VAT on UK, but when the product will come to the UK airport or on the customs. So HMRs will hold the goods at the point entering in the UK, and what they will do, they will charge the input VAT, how much we buy from USA, so they will charge the VAT there. But later on, input VAT deductible on the next VAT return. So when you submit the VAT return, I can claim it back. So I need to pay to release my product from the customs, but this VAT, what I paid to release the product, later on I can claim it back. So it's a neutral impact. There is no impact overall. There are a few more things here. If you read it, you will understand it, but it's nothing we have here difficult. All right, the next one we have the last activity. Let's have a look. So activity 8, it says postponed accounting. A UK VAT registered trader purchased goods from a supplier in Australia. So we buy something from Australia. These goods would have been standard rated if they were purchased in the UK. So if we buy from the UK, we have to pay 20% VAT. But of course, we are buying from Australia, so it will be like an import. Which of the two following are potentially correct VAT treatment? So let's have a look. The first one says Australian VAT would have been applied by the seller, so no UK VAT is applied. That's not true, because when you buy from Australia, they will hold the goods in the airport in UK. I have to pay the VAT to release it. That's not true. I said no. That's not true. Import of goods are always zero rated. Remember that imports are not zero rated. It is export are always zero rated, not import. When I buy something, I have to pay the VAT to release the good, but later on I can claim it back. The trader paid 20% VAT at the point goods entered to the UK. That's correct. So you have to pay 20% VAT when the product enters into the UK. The trader may charge UK VAT 20% on the value of the imported goods as output tax on the next VAT return. Yes, we can do that. So we can claim this VAT back. So I might charge UK VAT 20% of the value imported on the goods as output on the tax of the next return. So we can do that. So actually there is no impact overall. All right, so let's have a look what else we have. This is the end of the chapter. So if you revise, of course, like again, this chapter number 1, 2, and 3, before the next week will be absolutely fine. There is not many difficult thing we have here in this course. So if you revise, you'll be absolutely fine. If you have any question, make sure you make a note for that, and you can ask me on the next session. So hopefully, like if you revise, will be absolutely fine. And next week, we're going to start from chapter number 4. And we'll do all the activities together, and hopefully in 3 weeks' time or in 3 lessons, we're going to complete the book. Maybe on the 4th day, we're going to do some revision, and that's how we're going to complete this course. So that's it for today. And I hope like whatever I explained, you understand it. And if you have any question, definitely keep a note for that and ask me on the next week, or you can email me as well.